Most people missed this when the government shutdown started. Right now, what we're seeing happening is basically the government's or the Treasury general account, this is their checking account where they pay bills out, has now risen to over $1 trillion. That's unusual. Why is that unusual? Well, think of it this way. When we pay taxes or sales taxes come into the federal government, they go into this TGA account. Well, money then is, checks are written, people are paid, all that, and that money flows out to the system and pays bills. Well, they're not paying bills right now. So that account balance is skyrocketing. It's going higher, over $1 trillion now. It's usually not that high. But what that means is that money is being pulled out of bank accounts and the banking system, creating a tightening or a squeeze on the financial system. This is the underlying plumbing that makes money movement and liquidity move around. So as long as this government shutdown continues, expect banks to be going to the repo window every night and borrowing money. They pledge treasuries or CMOs, collateralized mortgage obligations, in exchange for cash. Well, as this cash liquidity shrinks or the liquidity tightens, expect that it's going to get straining basically the banking system. This is a big deal. This isn't headlines. The stock market isn't going to be driven by headline news. It's driven by liquidity. And this is an example of when liquidity gets interrupted in the overall economy, the US economy or global economy, markets contract. And this is where, going into next week, I'm concerned. As long as this government shutdown continues, as long as 670,000 U.S. Government workers don't get a paycheck, and if it were to continue to, December 1st, that's a, $21 billion or so plus amount of money that's not going into the system. That means credit cards aren't being paid. That means mortgages aren't getting paid. That means loans aren't getting paid. Car loans are getting paid. And it always starts in subprime. And we're already seeing that effect. So as long as this government shutdown, along with just the tightening of spending, continues, chances are we're going to see this liquidity squeeze get tighter and tighter. And banks are going to be borrowing more money or pledging more securities, treasuries, CMOs, to the Fed overnight window so they can meet their obligations. At some point, there's a breaking point in everything. And that is my concern as we go into this week and the following weeks, that the equity market, the liquidity in the equity market gets squeezed. And if it gets squeezed more and more, chances are this market is going to come down a substantial amount, maybe just 10 or 15%. But this is something you have to keep an eye on. And that's why you need to check out Best of US Investors. Check out our 14-day free trial where we talk about this stuff. We've been talking about this since the whole shutdown started, and about the liquidity squeeze that is starting to happen. Be an informed and aware investor. CNBC will lead you down a very scary path. So be careful. Whatever you do today, enjoy your day, as I am trying to do, and always, always live loud. Peace.